Hey, what's up, guys? Welcome to the next lesson in the politics section. Well, it's actually going to be the last lesson, and that is fiscal policy. How do we trade it, right? We just talked about how to trade elections, and this is really the next major thing in regards to politics and government that is going to affect currencies. It's fiscal policy. So, what is fiscal policy? We've covered this. A little bit previously, but we talked about monetary policy, which is central banks, their policy. That's the policy that involves like the monetary supply, interest rates, stuff like that. Fiscal policy is similar, but it's economic policy that the usually it's Congress or Parliament, right, depending on what kind of government is set up. That's what they decide, right? That's their economic policy. That's called fiscal policy. Monetary policy is central banks. So just remember that slight distinction. So this usually comes in the form of laws and other economic factors. So usually like a bailout would be considered fiscal policy, or extra stimulus that is passed, right? Relief packages, unemployment benefits, all these kinds of things fall into like fiscal policy, right? And usually it's when a particular sector or the whole economy is in trouble or needs regulation. That is really when it usually affects currencies, right? Mainly, keep in mind, is when the economy is in trouble. That is when it usually matters to currencies, right? Because it is solving a negative issue, right? So if they just pass a little law about taxes, that's not really going to move a currency, right? It's really something big needs to happen, fiscal policy wise, for it to matter. And that usually happens when there is a recession, or when the economy is struggling, right? Most recent times like 2008 and COVID, we've seen this happen. So why does it affect currencies? Now, again, fiscal policy is implemented in times of distress or economic hardship usually, right? That is when, again, it matters the most. So recent examples is the recession 2008 and the recent COVID pandemic, which at the time of recording we're still in, but toward the later side of it, which caused a massive downturn in the global economy, and thus the world governments stepped in and provided relief, right? We saw the U.S. provide relief, Europe, right? Lots of the major countries provided relief through fiscal policy, along with monetary policy, right, from central banks. They also helped. So they sort of work together a bit to accomplish their goals, right? Because remember, a central bank is also still a part of the government. So this usually acts as a positive driver for a currency when a government passes stimulus in times of distress, and that provides a tradable opportunity for us, right? Because if they pass stimulus or relief, whatever you want to call it, an economic downturn, that is usually bullish for a currency, right? That's a good thing. So how do we trade it, right? That's all great to know, but let's talk a bit more specifically. So again, this is usually only tradable fiscal policy-wise when there's an economic downturn, which happens once every few years at most, but usually like once a decade. So this is not a theme that pops up every month or two. It's not going to be super common. You're going to be trading this, but we know that when there is a downturn, this is something that we could possibly take advantage of. And for example, COVID, right? It's been going on for like a year and a half now. There was a few times we could have traded this. So it's not like you can just trade this once, right? Once a decade. There was many different trades to take, right? Many different countries with many different currencies to take advantage of things like this, right? So whereas a recession happens every once a decade-ish, there's still lots of opportunities, when it does pop up. Now, when we start to see headlines coming out about relief funding and, Congress/Parliament working on a stimulus package or a relief package, or a recovery fund, right? They're called lots of different things, but it's all a similar idea. This is when we need to start taking note and planning out a trade. This is when we really need to start watching, is when we start seeing headlines coming out that, hey, U.S. Congress working on a relief package, EU working on a relief package. Once you start seeing things like that, that's when you need to really start watching closer, paying attention to the price action of the currency, and seeing if it is reacting yet, because a lot of times these things take a long time to plan out. It's not just 1 week, boom, they announced it and it's done. No, I mean, this is government we're talking about, right? So let's go through a scenario here to just explain basically how you trade it. So this scenario, which I mean, I made up kind of, but not really. I mean, this happened last year. The EU, right, again, remember that's the European Union, announced that they are working on a stimulus relief fund to help aid economic recovery because they're in a recession. And of course, last year is because of COVID, but this is just a generic example. They're in a recession and they announced they're working on a stimulus fund. They're going to pass it to help aid recovery. So that's bullish, right? We use the IXL method. We determine the stimulus is likely to be bullish because, well, it is helping recovery. A lot of times these packages are huge. We're talking hundreds of billions and trillions of dollars, right? We're not just talking about a tiny little, drop in the bucket. So these things will move currencies, right? And let's say it's likely to pass. They're not just going to give up on a relief fund in the middle of a recession. It's likely going to pass. It might take a while to come to terms with the exact details, but eventually we know it's likely to pass. So now we need to confirm with price action. Remember, we always need to confirm with price action that the market agrees with our hypothesis. So we need to confirm there's buyers for the euro, and we see price of the euro, boom, a little bit of a bump after this was announced, right? So okay, right? Let's say this occurred in the period of a week. Okay, a week the euro went up on this news. We could probably say that this is bullish for the euro. The market agrees with us, so now we can start planning out a trade, right? So we can see there was a bullish reaction to the news. We can estimate the market is now pricing in this stimulus package. The market is now trying to price in the implications that this passes. So now we've confirmed this is a tradable opportunity, and we can start looking for a long euro trade, right? So we need to pair the euro up with a weak currency, right? Because it's strong. We don't want to pair a strong currency with a strong currency. We want to pair a strong currency with a weak one. And once we find that currency pair, right, we wait for whatever technical signal we're looking for, and we take a trade, right? We take a trade on that pair until the package, right, the stimulus package, the stimulus fund, whatever you want to call it, then it gets fully priced in, right? After it passes, that's when really it's no longer relevant. After it passes, and we've seen, a bit of bullish reaction after it passes, we can pretty much say, okay, that's been fully priced in, right? It's been fully baked into the price, and it's no longer a positive driver for the euro, right? It's done, right? The market priced it all in throughout the weeks, months, however long it took for it to eventually pass, and then boom, that's it. And we can move on, find other trades, whatever, but that's the end of that trade. Or tradable opportunity, right? You can trade it in many different ways. You can take small trades. You don't have to hold it that whole period, but eventually, that trade idea, that driver for the euro, right? That bullish driver, the reason the big guys are buying it, eventually it's going to be fully priced in, right? It's not going to go up forever. However, there's one thing I want to say. Because this involves governments, this could take quite a long time to eventually pass these types of things. So there may be roadblocks along the way, right? And long delays, as most governments usually ends up. Whatever they're doing takes much longer than it should, right? And so we need to take that in consideration when we're trading fiscal policy decisions, right? Because again, it's not going to go straight up, especially if it takes months and months. It's not going to go straight up for months and months. It's going to ebb and flow, go up and down. And this is what price action would look like, roughly, if there's a long delay, right? We've seen that initial reaction. Maybe this lasts a few weeks, and then, news comes out. Okay, it's going to take longer than I expected. They're not agreeing on the terms. It might take a few months even. Okay, well, then the euro's going to dip a little bit, right? It's going to go down. And it's going to lose its bullish steam. It's going to lose buyers for a little bit because, well, it's not happening right now. It's not even going to happen next week. I mean, this could take months. So there's no point in pricing it in now if it's months away. That's a little bit too far out, right? If it's unknown when it's going to pass, then, no one really wants to buy it. It needs to be within reason, within a week, within 2 weeks, within a month to really matter. All right. So in this case, after identifying there is a delay, right? So we'll start seeing headlines stating the process is taking long, Congress and Parliament can't agree on terms, right? Blah, blah, blah. When you start seeing headlines like that, and you start seeing price action like sort of stall out and even go down, that is indicative, okay, there's a delay. This is kind of delayed a little bit, right? So we would need to put our bullish bias on the back burner. It's still there. It's still going to likely pass, but we just need to just keep it in the back of our head and not take any trades on it for that time being, right? We could have traded the initial reaction potentially, but right when we just start seeing a delay here, we would not want to take any long trades on the euro until it clears up and it's close to passing, right? And then you'll start seeing headlines such as, they're coming to terms with a deal. They're looking to pass it. They're looking to vote on it next week, right? Because they have to vote things in, right? When you start seeing stuff like that, and then you start maybe seeing the euro, buyers coming back in, then that's when you can take it off the back burner and say, okay, the market's now continuing to price this in. I'm going to now look for trades. Now it's the time to get in, right? So again, with fiscal policy decisions, that can happen many times, right? Because it's government. It takes months for them to do anything. So that's something to keep in mind. And lastly, ending off this lesson here on how to trade fiscal policy decisions, this is an example with real price action and, an actual, fiscal policy decision. So this is the euro, right? Again, like I said, that wasn't really a made-up scenario. It kind of happened. So this is Euro USD 4-hour chart, and this is in 2020, right? Year of COVID. So right around here, so okay, a little bit of background here just to explain. The US dollar has been fairly weak throughout this period here. So the US dollar was a bit weaker, which was the weak currency, right? That you want to pair it with the strong, and the euro was strong. So we saw this very nice trend, and this is exactly what we're looking for when we're trading. A nice trend, a strong with a weak currency. So you need to use fundamentals for both. We'll talk about that later on, but I just want to talk about it here. You need the fundamentals for the euro and the fundamentals for, right? So you can't just say the euro's strong, I'm just going to buy the euro, because it's currencies. You always have to buy them in pairs. And so you always need to have a bias on multiple currencies. You can't just pay attention to one, because then you won't know which one to pair it with, right? So you need to pay attention to multiple currencies, have a bias for at least one or two. Well, you have to have a bias for two. One of them has to be strong, one of them has to be weak, for a really A-plus trade idea, right? Because that gives you the highest chance of it moving in one direction. And that's what we're looking for. We're directional traders, right? We're voting on a direction. So right around here, right, it's the euro started to stall out. And then right around here, the EU really starts to work on a recovery fund. This was summer. So summer 2020, they're working on a recovery fund. I forgot the exact amount, but it was, lots of money, right? Billions and billions, and I think it was like 800 billion. I forgot the exact amount, but it was a lot, right? This recovery fund, right, to help aid Europe in that time of economic distress. So what do we see? Bullish, right? We start seeing buyers coming into the euro. And this was before it was ever announced. It was just, expected. And so, like I said, the market was starting to price that in. It started heading higher. You could have bought on the pullbacks if that's your strategy, or bought on the breakouts, however you trade. And then right around here, right, it sort of stalled out a bit right before the decision, because, well, it's a decision. They could have easily voted it down because someone wasn't, one party wasn't happy and they needed to go back to the drawing board and delay it another few weeks, right? So it was a bit of, no one wanted to just completely buy. And once it was announced, what do we see? Officially, right here, the EU put the recovery fund into effect. They voted on it, they passed it. And so we saw even, more bullish pressure for the euro. So this is just a example of this theme can move currencies. Look at this, 1.12, right here, and 1.18, 1.19. What is that? 600, 700, and this was just, I cut it off here. Over the next few months, this thing kept going higher. We're talking 500,000, pips. These are huge moves. We're not. I mean, these things actually matter to currencies, and big banks, right? This stuff will move the value of a currency. So, very powerful theme to know and to trade. So I hope this lesson helped, right? Just another example of a theme you can trade. Again, these are all just themes. They all work similar ways. The market prices things in similar ways. I'm just sort of going into specifics on each different type of theme you might see commonly, and a little bit more specifics on how to trade those exact themes. So anyways, I hope you guys learned something, and I will see you guys in the next lesson.